How exactly is your fund different from other alternative investments and mainstream products that are out there?
The Vinci hedge fund runs 4 underlying strategies: South African equities, offshore equities, commodities, and fixed income, including convertibles. The South African equity part of the fund, we run long where we find undervalued shares, and on the short side, we short overvalued shares, or we engage in what you call a relative value trade. A relative value trade is, let's use the banks for example, where one bank is significantly more expensive than another bank, but the outlook is pretty similar, and we think over time the valuations are going to converge. We would be long the one we think is undervalued and short the one that we think is overvalued, and as the two prices converge, we end up with a profit. The offshore exposure is generally related to corporate opportunities and restructurings where we get involved in rights issues, where there are capital structures or bonds that are being restructured, refinanced, and we have opportunities to buy securities cheaply and unlock essentially absolute returns. Commodities are related sometimes to our long positions, or other times just to our views on currencies generally, We love convertible bonds. There aren't enough of them in South Africa, but they're great instruments where you own the convertible, you earn a coupon in the interim, and if their position ends up the way you thought about it, you end up essentially with an equity-like return, but with the backstop of a bond-like return in the short term. After the financial crisis, there were a lot of companies in Europe, particularly property companies, that had a lot of debt in different tranches, and investors had given up and the debt was trading very cheaply. What we need to do was we had to do our work. We had to establish which tranches, the ranking of the tranches, the assets backing each tranche. And then after we'd done that, we could go in and try and find the tranches the most attractive. It was a very low-risk trade as there were significant assets. Often the assets were overvalued, so you needed to adjust them down to market-type values or where the market was at the time. If you still had sufficient asset backing and you could buy these securities yielding about 20% in euros, or sort of on a 5-year term, we found that very attractive and we bought them. That's one example. Other examples are where you've had essentially corporate unbundlings, also often out of favor, where people have given up, they've got bad track records, but again, very much asset-backed, where you need to engage with management, and they end up unbundling or spinning off assets, and that way you unlock the discount, and you can make very attractive risk-adjusted returns.
Thank you, Andrew, for sharing the detail that you did on how you got into the industry and about Florin Capital Management. And thank you for tuning into Black ONYX.